What's up, guys? It's Terry
and Rowan
here from Artist Smart TV,
bringing you another episode of
the HSC
Economics Review.
So, JobKeeper ended on the 28th of March, 2021. And so now that it's officially over, I think it's now quite appropriate just to have a little bit of a think about how it impacted the labour market and unemployment, and then actually give us a bit of a, and hopefully by the end of it, analyze and evaluate and discuss the effectiveness of this particular policy. And the reason why I want to do that is because it's coming up more and more, just in terms of the HSC feedback that teachers are giving, that students are really struggling in terms of giving that evaluation and that assessment. So why don't we do that right now that JobKeeper's over? Let's assess it. We'll break it down, and hopefully you guys can walk away feeling a little bit more confident and comfortable doing your own assessments and evaluations of policies, because you'll be doing a lot of that over the next couple of terms.
Yeah. I mean, there's a lot more policy to evaluate as well.
So I think and then we'll also just take a little bit of a dive into how the labour market is going to be impacted later on, how the distribution of income is going to be affected. So all of this very, very relevant stuff to topic 3, topic 4, but first of all, RIP JobKeeper.
Yep.
So Rowan, do you just want to give us a little bit of a quick overview of what it was?
Yeah, cool. So look, JobKeeper, when it was implemented, its design was to encourage businesses that maybe had to shut shop, right, because of lockdown rules, to be able to find a way to retain their employees so that when they could reopen, those employees would continue to have work. Now, the point of that, or the I think underlying assumption, was if you can keep someone connected to an employer, they're more likely, therefore, to not become unemployed, ultimately, even if they don't have any work, right? So they might be employed, but working 0 hours. And then secondly, it was a way, therefore, to be able to provide, stimulus into the economy, right, through the JobKeeper payments, so that people, even if an employer wasn't able to afford to pay them, they were still going to be earning money to be able to support their family, go out there and spend money in the economy, and hopefully create a multiplier effect. Now, what that looked like was that initially it was $1,500 a fortnight when it was originally launched. So if your employer stood you down due to COVID lockdowns, your employer would be eligible for a $1,500 payment, which would then be passed on to you. Now, from September 28th, 2020, it got staggered, and it was a reduction. So depending on how much you worked, if you worked more than 20 hours a week, you got $1,200, which was, a $300 reduction. If you worked less than 20 hours a week, you had a $750 amount for that fortnight. And then from January the 4th, it was cut even further. So it was cut to $1,000 a fortnight for greater than 20 hours of work a week. And it was cut to $650 a fortnight for less than 20 hours a week. And the rationale behind the cuts, or I think first of all, the rationale behind moving it from greater than 20 and less than 20 is that originally it didn't matter how much you worked, employers were eligible to the full $1,500, which I think resulted probably in some
pay rises.
Yep, that's right. And there were certainly stories of that. People like, great, like I was doing 10 hours a week and I'm now getting $1,500 a fortnight, whatever. And then secondly, the thinking behind staggering it was ultimately, what the government wanted to do was really wanted to stagger it in a way that would still support people, but also stagger it so that as employment started turning back on, firms should in theory be able to once again afford to support wages, and therefore it didn't blow out expenses beyond what it already was.
Yeah. And so that was actually the main reason that the Treasurer, Josh Frydenberg, said that's his main justification for getting rid of JobKeeper, is that JobKeeper by nature had a very distorting impact on labour market outcomes like wages and employment numbers, because it was basically, quite a large sum of money, as Rowan said, more than what people were typically being paid for. And so the issue was that if they maintained JobKeeper as it was, that people would end up in jobs where they probably weren't the most effective and most efficient, and then the overall economy would suffer from a lack of productivity, and that's exactly what you don't want in a recovering economy.
That's right. Now, it's interesting just to contextualize, initially when JobKeeper was rolled out, so between April and September, when the full program was in place, the $1,500 a fortnight. 3.6 million Australians took advantage of it, and then since it got staggered from sort of October into December, that dropped to 1.54 million. So basically more than halved the number of people, which showed the economic recovery, in theory at least, that was underway, in that businesses were able to open back up and resume.
And that recovery was supported by the fact that even before they started cutting it down, they were trying to get rid of it completely. So they were using those kinds of numbers to justify a decision to cut it back, and where they couldn't cut it back, they rolled it back instead.
That's right. Now, what's interesting, Terry, is I think different sectors had a different need for JobKeeper, right? So some sectors, had a much bigger amount of, employees, and therefore share of COVID sort of JobKeeper stimulus. What were some of those sectors that particularly had a lot of employees on JobKeeper?
So obviously, because of the decline in tourism, accommodation and food services absolutely needed a ton of support, because these facilities weren't able to be opened. These businesses had to close because of the mandatory lockdown, social distancing, whatever. There was also quite a big number of shutdowns in services and retail trade, again, just because they couldn't open.
That's right, yeah. Now, I think there were some ones that I was a little surprised by when I was looking at the data. Construction, yes and no. I mean, there was 420,000, right, which was larger than accommodation and food services. And to some extent, you sort of understand that. Well, okay, there's some social distancing at play. That's potentially part of it. Strong unions potentially also sort of influencing it. The one that got me was professional, scientific and technical services. I mean, if there was any sort of role in terms of services you would anticipate would be more easily able to
go online.
Right? You would think professional, scientific, technical services would fit that bill. Now, they're also not the largest percent of. And this is what I think is interesting, and I just want to flag this, right? If we look at it, arts and recreation had 122,000 employees on JobKeeper. Accommodation and food services had 317. Now, as a share of pre-COVID employment, that was sort of also, I think, interesting, right? To have a look. You've got, 49%, so almost half of people on arts and recreation were on JobKeeper.
Yeah.
Okay. Accommodation and food services are about a third, right? With professional, scientific and technical services, again, we would have thought that could have gone online pretty easy.
But they had 40%.
But yeah, they had just on 40%, right, as a share of pre-COVID employment, which just gobsmacked me in terms of, and I think this is where there's been a lot of criticism about JobKeeper. If we're doing a bit of analysis here, right, one of the big criticisms that came out of JobKeeper was a lot of large corporates, right, who claimed JobKeeper, perhaps didn't need to, right, but claimed it, and potentially utilised it to sort of prop up corporate profits from a market perspective.
But I think that's a perfect example if you're still doing year 11 economics of just the profit maximization mentality and goal that businesses have. If that option is available to you and you can make that kind of money.
Yeah. And if it's legal, which it was, they still qualified. It wasn't like these guys were falsifying their qualification. They were. So I think what it does show is that certainly, there's going to be different sectors of the economy where JobKeeper has arguably ended up being more effective. And I think when you're doing your analysis, I think it's worth highlighting, look, there's some overall data that we can look at that shows that overall, in an RBA report from last year, and we're going to look at more relevant, more current data shortly, but an RBA report from sort of October 2020 basically said that 1 in 5 employees who received JobKeeper would not have remained employed if JobKeeper didn't exist, right? So, their point was that it reduced total employment losses by about 700,000 people. So, you've got like an overall figure here from the RBA that indicates, well, double thumbs up for JobKeeper. But what you should be mindful of is how did different sectors take advantage of it, and how did it help different sectors, and was it enough for different sectors? And I think that's where some of the real criticism emerges, and it goes to I think some of the points I know we're going to make about inequality.
Yeah.
How did the states compare with JobKeeper in terms of their uptake?
Unsurprisingly, the states with the largest population sizes would have had the most uptake. So that's Victoria, New South Wales, Queensland with quite a lot as well. And then, so I think from my understanding, it was pretty universal. I don't feel that the initial impact was felt as disproportionately. What I do find was disproportionate though was the recovery.
Yeah, that's right. And you can see that, right? I mean, you see that Victoria had a drop from, JobKeeper 1.0, which was, the full 1,500, and JobKeeper 2.0, which was the reduction 1,200, 750. They had a 44% drop, right, in the number of people on it, which sounds good, right? But it only sounds good until you compare it to everywhere else in the country, which, New South Wales was 60% drop, ACT 62, Queensland 64, all the way up to WA, who, basically pretend to be their own country, which had a 70% drop. Now, the point of this is, why was Victoria slow, right? Why have they not had a significant drop as the rest of the country?
So remember, so just to clarify, because they don't have as much of a drop, it means that they had more people who still needed it.
That's right, yes.
If you remember, think back to Q3 last year, they did have that second wave, or a much more significant second wave than the rest of the country had, so they went into another lockdown. And so it's unsurprising to see that, therefore, more people were still needing to remain on that support.
And although I was sort of, tongue-in-cheek with WA, it's the exact reason WA have had the most significant drop, because throughout the entire sort of, 2020, they probably had the most strict sort of travel restrictions out of all of the states. They maintained them for the longest. They've had almost some of the lowest, number of cases total. And so it's not surprising to see that different states have therefore had different recoveries as well. And so JobKeeper in the end has probably had its largest impact on the east coast of Australia.
Typical East Coast gets everything.
Yeah, that's right. So how are we now? If we zoom to now, right? Because we obviously want to evaluate this. We've looked at, okay, this is what it is. This is how many people are on it. There's some RBA stuff that indicates it's pretty good.
Yeah, Treasury as well.
That's right.
Can I just jump in?
Yeah.
So I think it's important that when you do use data, that it's actually that you mention where you're getting it from, because it's different if your mate says it versus the RBA says it.
Yeah, very much. And that's where I guess what we're trying to do is, whenever we do sort of share some stuff, generally we'll try to share, well, this is, RBA, or this is Treasury, or it's ABS, or whatever it might be, right? I think that's definitely a good point, because while you might feel like you want to get away with some stats from time to time and make some stuff up.
I know that people make stats up, so if you're in the comments, I see you, man. You're making stats up.
So where are we at then, Terry, for today, right? Most recent data that we have on the labour market.
I think it did drop today. So for March, unemployment rate's gone down to 5.6%, which is honestly very, very close to what it was before this whole COVID thing kicked off.
Which is crazy, isn't it?
It sounds unreal, it sounds unreal. Our participation is back at 66.3, again, close to what it was before COVID. Employment's up at about 13 million. The underemployment rate is about back down to 7.9%, which again was what it was.
Yeah, it's very similar, isn't it?
I feel like we're living in a simulation. It's just...
So the V recovery that we were hoping for, at least from a labour market point of view, I know economic growth is slightly different, but at least from a labour market point of view, seems to have materialised, right? Now, the big thing is there seems, right? If we look at it, I think what's, interesting, right, is that, we have seen a situation where unemployment, we've got, maybe 780,000, give or take, people unemployed. And as you said, that's quite similar, right, to where we're at. And yet we know that tourism is nowhere near back to where it was, right?
And it won't be for quite some time.
That's right. It won't be for quite some time. We know really, despite, stimulus attempts that, retail, education, there's a whole bunch of sectors that are still struggling. And
fruit picking.
Yeah, right. Really haven't yet got back to employment. So it is interesting. Is this because... typically I would have expected, and this is my take on it, I would have expected that maybe if our unemployment rate was as low as it is, I would have expected to see underemployment to be a lot higher. Now, or I would have expected to see participation lower, right? So that you've got a lot of people that have gone to uni or decided to study instead of work, so they've just exited the labour force, right? And therefore it's why our unemployment rate looks great, but we've got higher participation, or we've got higher underemployment. What do you reckon's going on here?
One thing to consider with the underemployment rate is that even as great as it is, it doesn't differentiate between, you know, people who are like really underemployed, and that might possibly be the case. People have probably, like, although the stats don't show it, because if you remember, to be underemployed, you just have to work. You just want to be working more hours, but you could be on 2 hours a week versus being on 25 hours. You'd still be counted, and if you wanted to work more, it would still be the same. So my first guess would be that maybe people are just now more underemployed than they were before, but because they've already been counted in that stat,
you can't tell. That's right. Now, it's interesting though, because one of the things, I think that's very right on the money. I think it's the only way we can almost make sense of the data, right, is to just assume that, well, maybe people are just on average working a lot less, right? I think what I find interesting, you know, is that we have seen a growth in total, at least from February to you know, sort of March, we've seen a growth in total hours, monthly hours worked in all jobs, and the yearly change is also up, right? It's actually up by 22 million hours. So this also sort of confounds me, right? Because if it's a question of we've got more people working, but they're working less hours.
That would make sense, yeah.
Yeah, then you would expect to see that total monthly hours worked in all jobs to probably be a little lower, so that the average it works out across everyone is lower, and so we've got higher levels of underutilization in the sense that people are working 1 hour but they want more. But even that doesn't seem to quite make sense. I don't have an answer. I don't
either.
Yeah. And I suppose for now that's just okay. Well, you know, and sometimes this will happen. Sometimes the data will come out, and I think the thing to note is Terry's point at the start of today was that, you know, Frydenberg wants to remove JobKeeper because it's creating a lot of noise in the labour market, right? So signal and noise, this idea that you can actually see what's going on and understand it versus having a whole lot of, and I think that's partly to some extent a little bit of what we're still seeing, right? Is that JobKeeper, you know, the data for March still reflects JobKeeper.
Yeah.
JobKeeper hasn't been removed from it yet. And so the numbers may not perfectly actually make sense for a traditional labour market, because JobKeeper's added a whole bunch of noise to the signal.
And just to add on to that, so the Treasury actually made a statement in one of their reports saying that up to 100,000 or 150,000 people are probably going to lose their jobs once JobKeeper ends. And so those people have yet to show up in these current stats.
That's right.
So maybe they will show up.
And we'll see a little increase.
That's
right. We'll see maybe, you know, hours worked for, and hopefully, I think that's the point. We'll start to be able to look at the data again and go, oh, well, this makes more sense now. You know, we know the levers. If that goes up, that should go.
But I think I think this is a really valuable video in that sense, because then you start to actually see how things move.
That's right.
When you can see the differences, you understand and appreciate those levers a lot more.
That's right, definitely. Now, in terms of, if we were to go to some analysis, right, in terms of like, all right, and look, again, a big question of the effectiveness of JobKeeper to some extent will be, well, when it's removed, what happens, right? But it's, you know, still early days for that. So right now we know the RBA has said, yes, great, 700,000 people saved, you know, had jobs that wouldn't have, awesome stuff. What are some of the analysts saying in their perspective on, the effectiveness of JobKeeper?
So we'll start with the good. Okay. So an EY chief economist said that the jobs-led recovery was well underway, and continuing just the really positive signals that the economy was recovering. 5 out of the 8 states and territories had a rise in unemployment during December.
Rising employment.
What did I sound like? Yo, my bad. And so the labour market's going to continue this momentum, just carry things forward. I think the Australian Council of Trade Unions president said that 2 million people were actually looking for a job or for more hours. And so it just seems really, really healthy, right? People are working, people want work, everything looks great.
But I think what the ACTU president was trying to say, so that's the Australian Council of Trade Unions, was I think really trying to get at that idea of, to Terry's point, that there's a lot of underemployment, right? Yes, people have work and they're being counted, but there's a lot of people that are looking for more work here, because tourism, aviation and universities and education, all significant employers, you know, are still ground zero almost, right? Now, equally, I know the Australian Council of Social Services, their perspective was that there were 1.5 million people that would still be on unemployment benefits. And they're questioning, therefore, then, you know, what the, you know, sort of unemployment benefits looked like, and the fact that maybe they needed to continue to rise. And that's certainly something we can look at from an inequality point of view. Seek, they provide some data from a job perspective. What have they said, Terry?
So they've actually had quite an interesting finding that there's the highest number of job ads posted in a month in their 23-year history, right? But the applications per ad were their lowest level since 2012. So heaps of jobs going out, not enough people applying for them.
Which is interesting, isn't it?
And so this might actually give us a little bit of a brief look into our earlier problem of why the numbers weren't matching, is that there might be actually just it might be explained by migration. And that, so an independent economist, she said that reduced supply of skilled overseas labour has led to a shortage of labour, which is why these ads are, there's so many ads, but not many people applying for them. So we've just relied on this skilled migration tap, if you will, for 20 years to just fill all these gaps for us. And then the minute that we turn that tap off, we now realise, oh crap, we
need them. Which I think is a fantastic point, because, and I'm actually interested to see how this plays out, because pre-COVID, and COVID has certainly highlighted it for the RBA, that the NAIRU, the natural rate of unemployment, was 4.5. The RBA had redefined it, sort of 2019 to lower it again. But the point was there was spare capacity in the market. And that then created low wage growth, which then has implications on levels of consumption, economic growth, etc. So the RBA, in their decision-making around a low, very low cash rate, has basically said that then they don't want to lift it until they get unemployment to essentially the NAIRU, right? Or as close as possible, because that's the point at which they think it'll then create, some upward mobility in wage growth. Now, what's interesting is this may happen for Australia, but not in the way the RBA intended, right? Just simply by, if we can continue not to bring in skilled migration, we'll continue to have supply constraints that exist, therefore causing, the sort of, cost of wages to...
But I just want to point out, that sounds good, but it really isn't, because we're therefore not getting the skills that we need to grow the economy.
Well, that's right, yeah.
So
it's a double-edged sword, right? Like, it brings some positive, but really not in the long term. It's not the right way you would want to achieve it. It's a short-term hack to a longer-term problem, in essence. What about income inequality? What's been going... Because I think this has probably been some of the big criticisms around the JobKeeper program, right?
So I think, as we were talking about earlier, I just want to take a step back first, just looking at the recovery. And as we said before, there's also job data to suggest that the recovery hasn't been even. And so if you have a look at, there's certain states that have done fantastically in terms of new job posting on Seek. So, for example, WA, 17% increase in the number of job ads they're getting. New South Wales, 9%. Victoria, 12%. But then you've got, Tassie at 4.8%. Northern NT at 4.6%. So this is, again, going to... it's something we don't talk about too much, is exacerbate just that kind of inequality between regions.
Which goes to the data we were looking at before on, the 70%. WA had a 70% reduction, right, in people on JobKeeper. Well, that sort of ties really nicely then to the fact that they've had a 17% increase in jobs, right, at least being listed. So you can see how, the growth in job ads sort of also at a high level correlates with the reduction of people on JobKeeper as well in a state, because it indicates the underlying economic recovery, but therefore as well the differences certainly between regions of Australia. I think what's also sort of interesting throughout this whole period, unfortunately, right? I know Bruce Bradbury, an associate professor of UNSW, is one of many people, I think, that have really been arguing that, okay, once we get rid of the JobKeeper payments, we're going to see higher income inequality emerge, right? Now, part of that is, simply just because, well, JobKeeper, you might have been earning more on JobKeeper than you might have been, if you were working less than 20 hours a week, you might not have been earning the $650 equivalent, right? But you would have been receiving it. So there is an element where it might actually cause people that were already on the sort of fringes and maybe not earning as much and struggling to actually see a drop. Now, that drop has probably returned to what they had before, but it still will have some inequality issues. There's definitely some challenges with wealth inequality that's emerged throughout this.
Yeah, because I think the fact that we dropped our cash rates so low, if you think back to the transmission mechanism, it also has effects on asset prices. And so assets have just completely taken off.
Yeah.
You know, it doesn't matter what pick your poison.
That's
you know,
right.
housing, shares, cryptocurrency, it doesn't matter what, things have just been flying. And so it's important to remember that while that generates wealth for investors, it does leave behind those who aren't particularly asset rich. I think I just want to also point out that the exact figures for this kind of inequality will take some time to get out. Inequality, you know, typically does take quite a while. You know, for example, typically most of our most updated inequality stats at the moment go back to just about 2018.
Yeah, that's right.
So we won't see the big picture
For a couple of years, potentially.
Yeah.
I mean, maybe early, but I think it might take a bit of time, definitely.
Yeah.
Now, of course, I think the big thing, the positive, I think, from an inequality point of view, is that more people were kept in jobs. 700,000 were kept in jobs that wouldn't have if we go back to the RBA data. We know that if you've got more people unemployed, you get worsening inequality, just because even though you know, they're receiving government support, if they're unemployed, it's at levels much lower than income and wages from work, and so therefore the higher percent of people that you have unemployed for longer, the worsening inequality levels you get longer term. So the real positive for Australia on an inequality level is that we've had a very quick bounce back in the labour market. We're back to almost similar levels of unemployment to pre-COVID. And so therefore we could argue that JobKeeper has played a critical role in preventing our, you know, income inequality from worsening much more than it could have. Yes, underneath that though, there's some questions about wealth inequality that is certainly, I think, exacerbating. And secondly, some questions about whether or not the original unemployment benefits were ever the right level, right, to promote more equitable distribution of income. Now, I know Morrison has made a small boost to that. What does that look like?
So it's $50 a fortnight.
big increase.
Yeah. So that's kicking off from the April the 1st. That was 2 weeks ago from the time of filming. But I think it's a really good point to mention that while this is, you know, not very much money, it's a bit of a kick in the face, really, because for a period of time, you know, households who were on very low incomes actually got to see what a more equal Australian society might have looked like. And then to just completely scale it back, it's now just saying, well, you've seen what you could have, but we're just not going to give it to you.
Yep.
So it's definitely not enough, you know, $50.
That's right. And I think the tension, which is what I'm sure, you know, the Morrison government will argue, is, well, we got to pay for it somehow, right? You know, and there's a tension here. There are benefits of inequality. You know, I think we should highlight that. I mean, just that's part of the course, right? Is that the tension is between, you know, like wanting to have, you know, sort of an equitable amount of you know, of distribution, because it produces positives for living standards, it produces positives for overall average consumption and economy. But on the flip side, a little bit of inequality produces a whole lot of incentive effects. You know, incentives to work harder, longer, to train more, to upskill, to travel more geographically. And to some extent, you know, I get the sense that the current government want to keep their budget as tight as possible and try to encourage as many people to jump into the workforce as possible.
Because that's what they were doing before COVID hit anyway.
That's right.
They'll probably just return to
that. And so having too generous, and not to say it is, but having, let's call it more generous, shall we say, it's a better way to articulate it, unemployment benefits, therefore, to some extent, at least from the Liberal government perspective, is such that it may, you know, dissuade people from being as active in searching for work. Now, whether or not it's true or not, that's at least the economic theory. Now, just to wrap up, Terry, we touched upon this at the start. We looked at, you know, the fact that there was that technical professional services industry that seemed to have a lot of JobKeeper support, strangely. What's some of the criticism that's come through of that? And how could we utilize that as part of this analysis?
So a superannuation group known as Ownership Matters, they took the liberty of actually looking at this information, because it was a legislation which made it publicly available information. So companies had to actually disclose where that JobKeeper money was going. And so they took a look at it and they said, well, 88% of Australia's 300 largest public companies actually made a profit last year. So when you think about that situation, when you're making a profit, do you necessarily really require that kind of level of support from JobKeeper? And the level wasn't small. So these 300 companies, they had, they got about, I don't think I included.
Yeah, no, I think they had 2.5 billion. $2.5 billion, which is a big chunk of money.
Big chunk of money, yeah, because the whole thing was only about $101 billion.
Yeah.
So they got a fairly sizable amount. They didn't really necessarily need it, and if you have a look at the earnings, they actually were lifted by about an average of 20%. So they were earning more money as well.
And I think what's interesting here is that pre this, only a little under half, I think, a little over half were making a profit. So there was maybe almost 40% of these companies that weren't making a profit that all of a sudden started making a profit off the back of this. I think what's interesting is only a handful of them have pledged to return it because they've said, well, look, we don't need it. About $100 million worth of the $2.5 billion, so it is a small amount. These are Toyota, Super Retail Group, and a logistics operation called Cube. So great job to those guys. I think, though, and this is where, just playing devil's advocate for a moment, the real tension here is that it's interesting that a superannuation group did this study, because a superannuation group actually benefit the most in some ways from this, because if the government pays out these, the JobKeeper, these corporates take it, it improves their profitability. One, what happens is they probably have a dividend payout, right? And secondly, they're going to get a capital gains in their share value. Who are the biggest owners generally of a lot of, the 300 biggest publicly listed companies in Australia? Well, superannuation funds. Where does all the money come from superannuation funds? Well, that comes from everyday Australians, right, who have compulsory superannuation that gets invested in the stock market. So it's sort of a little interesting, because while, yes, we might look at it and go, oh, these companies are making profit, because they were publicly listed companies, actually, in some sense, the benefits also play out for superannuation funds and for us, right? Now, of course, to some extent, this is a little bit of trickle-down economics. I'm mindful of that. I'll call that out. But it's where it gets a little complex, because to some extent, we do see the benefit of that. If this had been privately listed, non-publicly listed, where assets are held by very few private individuals, and there's, I'm sure, certainly cases of that as well, right?
Absolutely.
Then that's where I think it's probably of a bigger concern, because the benefit by no means flow more more fairly across the economy.
And unfortunately, we just don't have that data,
that's
right, of those private companies, so we won't ever know.
Yeah, that's exactly right. So, any final comments, Terry, as we wrap this up in terms of the analysis of JobKeeper for where we're currently at?
So just my final thoughts really are that this is a wait and see type of thing. So this is definitely a video that we're going to have to follow up, over the coming months. Hopefully by the time you guys do your trials and your HSCs, there'll be more data coming out, and we can get a more accurate picture of the policies such as JobKeeper. But I think it's important just to have a good think about the way that we approach this, right? We looked at a lot of industry perspective, we looked at a lot of analyst perspective, we looked at the treasury perspective, RPA, we used statistics. While we don't really give, I guess, a definitive answer at this stage, things like we said, we said things look good, but there's a lot of noise going on. That's the kind of evaluation and assessment we really want you guys to be able to do.
And it's okay to say that. I think that's the important thing as well. It's not always that you need to have this awesome, definitive, here's what's happening and here's why it's good or bad. Because as you can see, no one can really work that out right now. It's completely okay to just call out the problems and highlight that, look, it's uncertain. I think you've got to have your reasons, certainly for what the problems are and why it's uncertain. But for the time that it is uncertain, I think it's perfectly okay to be able to articulate that. So look, guys, if you've got value, share this with your friends. If you haven't already, hit subscribe, because clearly this is really a part one of a multi-part that we're going to have to keep coming back to as we get more clarity on the outcomes that flow from the removal of JobKeeper. If there's anything we can do to help, you've got questions, leave them below. Additionally, if you need more help, Terry and I both lead economics classes here at Art of Smart. We'd love to see you in one of our classes. Alternatively, we have an incredible team of one-on-one economics tutors that can work with you online or in your home as well. Head over to artofsmart.com.au to find out more information. Otherwise, we will see you in the next episode.